Welcome to the deep dive. So today we're getting into Baidu's first quarter 2025 results. These came out on May 21st.
That's right, and we're working from their official earnings release, the PDF they put out.
Yep, 1Q25 ERVF.PDF. And our plan really is to pull out the key numbers, the main takeaways, figure out how Baidu's doing, especially, with all the focus on AI.
And right off the bat, that Baidu core revenue number jumps out, up 7% year over year. Pretty solid start.
Yeah, 7% for the core business.
Mm.
So how did the overall company look? What was the total revenue picture?
Okay, so total revenue landed at RMB 32.5 billion. That's about, what, $4.47 billion US?
And how does that compare?
It's an increase, but a smaller one, up 3% compared to last year.
Right, so 3% overall, but 7% for the core. What's dragging that overall number down a bit then?
Well, it looks like IQIYI, their streaming service, that part of the business saw revenue dip by 9% year over year.
Okay, down 9%.
Yeah, down to RMB is 7.2 billion, or just under $1 billion US dollars, about $990 million. So, yeah, challenges in the streaming space, it seems, while the main Baidu engine is pushing ahead.
Interesting. So let's break down that Baidu core number more, the 7% growth. Where did that come from? The report mentioned online marketing.
It did, but that part, their traditional online ads, actually went down, decreased by 6% year over year.
Right on 6%. Okay.
Yeah, landed at RMB 16.0 billion, so around $2.21 billion.
So if online marketing was down, where did the core growth come from? Must be the non-online part.
Exactly. And this is like the really big story here. Non-online marketing revenue surged. It jumped 40% year over year.
40%, wow.
Yeah, 40%, up to RMB 9.4 billion or $1.3 billion. And the report is clear it's mainly driven by their AI cloud business.
Okay, that is significant. A 40% jump powered by AI cloud. That really shows where their focus is paying off. What about the bottom line? Profitability.
Profitability picture is a bit mixed depending on how you look at it. Net income attributable to Baidu, the standard GAAP measure, looked really strong.
How strong?
Up 42% year over year. Came in at RMB 7.7 billion or $1.06 billion.
Okay.
And diluted earnings per ADS, that was also up significantly by 45% to RMB 21.59 or $2.98 per share.
So far, so good. But you said mixed.
Right, because the non-GAAP net income attributable to Baidu actually went down. It decreased by 8% year over year.
Oh, okay. Down 8% on non-GAAP.
Yeah, to RMB 6.5 billion or $891 million.
So explain that for us. Why the big difference between the GAAP and non-GAAP profit numbers? What's going on there?
Well, non-GAAP usually filters out things like share-based compensation, amortization of intangibles from acquisitions, stuff like that. The idea is to give a clearer view of the core operational performance.
Right.
So seeing GAAP profit way up while non-GAAP is down suggests maybe some big non-cash items or perhaps gains on investments boosted the official GAAP number. But the underlying operating profit measured by non-GAAP might be facing some pressure.
So maybe core margins are tighter, even if the headline profit looks good.
Could be. It's something investors definitely watch. They look at both numbers to get the full story. It points towards the cost of those strategic investments potentially impacting operational profitability, even as the overall picture is positive on paper.
Got it. That's really helpful context. Let's circle back to that AI cloud then. You said it drove the 40% non-marketing revenue jump, and the report specifically says AI cloud revenue grew 42% year over year.
Yeah, very strong growth there. And the leadership comments really hammered this home.
What do they say? Robin Lai and Jinji He?
Robin Lai talked about accelerating momentum. He stressed that the market is recognizing their full stack AI products and solutions, especially, being competitive on price and performance. He even connected it to their autonomous driving ambition.
Okay, linking the AI cloud success to other AI ventures.
Exactly. And Junji He, the interim CFO, basically backed that up, said AI Cloud provides solid support for revenue and helps speed up AI integration across their whole mobile platform.
So it's not just a side project anymore. It's clearly becoming central to their strategy and their revenue.
Absolutely. It's a core pillar now.
But growing that fast must cost money, right? Do we see that reflected in their expenses?
Oh, yeah. Cost of revenues was up 14% year over year.
Okay.
And they directly linked that increase to, well, the AI cloud business, naturally, and also higher traffic acquisition costs, basically paying to get users onto their platforms.
That makes sense. What about other operating costs? SG&A.
Selling, general, and administrative expenses, yeah, those were up too, by 10%, mostly put down to spending on channel partners and marketing efforts.
Okay, investing in growth. But I noticed something interesting. R&D expenses actually went down by 15%. That seems counterintuitive if they're pushing AI so hard.
Yeah, that is interesting, isn't it? The report says it was primarily due to lower personnel-related expenses in R&D.
So fewer people or maybe lower cost per person.
It could be a few things. Maybe some big projects wrapped up, maybe some restructuring, maybe just the timing of bonuses or stock compensation. It doesn't necessarily mean less focus on R&D overall, but it's definitely something to watch in the next quarter.
Right. Keep an eye on that trend.
Yeah.
Okay, let's look at their financial footing. Cash position, cash flow.
They're sitting on a pretty big pile of cash. As of March 31st, they had RMB 142 billion. That's about $19.57 billion US in cash, equivalents, restricted cash, and short-term investments.
So very healthy balance sheet.
Very. But, and this is a big but, their free cash flow for the quarter was negative.
Negative. How much?
Negative RMB 8.9 billion, which is around negative $1.23 billion.
Wow. Why the negative cash flow with all that revenue?
The report points directly at the cause, mainly due to an increase of investment in AI business.
Ah, there it is again. So they're spending heavily investing cash now for future AI gains.
Exactly. It's that classic tech growth story: invest heavily upfront, sometimes burning cash, for the promise of much bigger returns later. It shows how serious they are about this AI push.
And are they still returning value to shareholders amidst all this investment?
They are. They bought back US $445 million worth of their shares in Q1, so balancing investment with shareholder returns.
Okay, so strong cash reserves, but deliberately choosing to invest heavily in AI, impacting near-term cash flow. Makes sense strategically. Let's shift gears a bit to the operational side, the actual AI stuff they're building. Ernie 4.5 and Ernie X1 were mentioned. What are these?
Right, these are their big foundation models. Ernie 4.5, released in March, is their flagship multimodal model,
Multimodal meaning.
meaning it can handle different types of input, not just text. Images, audio, maybe video down the line. It makes the AI much more versatile, more like how humans interact with the world.
Okay, and Ernie X1.
That one's focused on reasoning, designed for more complex tasks, logic, problem solving. Think of it as the more analytical brain.
And they launched these, then quickly followed up with turbo versions.
Yeah, in April, they released Ernie 4.5 Turbo and Ernie X1 Turbo, enhanced versions, but also positioned as lower priced.
Interesting. Faster innovation and trying to make it more accessible or competitive.
It seems like both. The AI space is moving incredibly fast, so rapid iteration is key. And making powerful models more affordable helps drive adoption, gets them into more developers' hands. It's a smart, strategic play.
And it wasn't just the models themselves, right? They updated platforms too. Fan and Paddle.
Correct. Fan is their Moz platform model as a service. They upgraded it with more models available and better tools for developers, basically making it easier for others to build on Baidu's AI.
Lowering the barrier to entry.
Exactly. And Paddle 3.0, their deep learning framework, that's the underlying engine for a lot of this stuff. Releasing a new version means performance boosts, new capabilities for researchers and developers using their ecosystem.
They have a lot of patents in this area.
Yeah, the report noted they held China's largest portfolio of AI-related patents at the end of last year. It just underlines their deep R&D investment and leadership claim in AI.
Okay, so a really comprehensive push on the AI front, models, platforms, underlying tech. What about autonomous driving? Apollo Go. Sounds like big moves there too.
Huge moves, especially internationally. They launched in Dubai and Abu Dhabi back in March.
Wow, expanding beyond China.
Yep, and they started open road testing in Dubai in May. That's a major step onto the global stage.
Any other partnerships or expansions?
Yes, they partnered with CR Inc., a big Chinese car rental company, to launch autonomous vehicle rentals. That could be a game changer for accessing robotaxis.
Renting a driverless car. Interesting.
And they also got the green light for passenger testing on open roads in Hong Kong in April, so broadening their operational areas.
And are people actually using the service? What do the ride numbers look like?
The growth is pretty staggering, actually. Over 1.4 million rides just in Q1 this year.
1.4 million in 3 months.
Yeah, and that's up 75% from the same quarter last year. Shows real momentum. And by May, they'd crossed 11 million cumulative rides in total.
11 million rides. That's becoming a real service, not just an experiment.
Definitely. And they're getting recognized for it, too. Won a Gold Edison Award for driverless vehicles. Fast Company ranks them #2 in Asia-Pacific for innovation because of Apollo Go. It's validation that their tech is leading edge.
It really feels like the AI investments are paying off visibly in areas like Apollo Go. What about their core Baidu app and mobile ecosystem? How's that holding up?
Still growing steadily. The Baidu app hit 724 million monthly active users in March.
724 million. That's a huge user base.
Yeah, up 7% year over year. And that user base is crucial, right? That is the platform where they can roll out all these AI features and services.
Makes sense. And how are they monetizing that within the app? You mentioned online marketing was down, but anything else?
Well, managed pages are becoming more important. These are like mini programs or brand zones within the app. They actually accounted for 47% of Baidu Core's online marketing revenue.
Almost half. So even within online marketing, the format is shifting towards these integrated experiences.
Seems that way. It fits the trend of keeping users within the ecosystem. But again, the decline in the overall online marketing bucket just reinforces why the growth in AI cloud and other non-online areas is so critical for them right now.
Okay. One last area mentioned was ESG and shareholder value. Anything quick to note there?
Just that they released their annual ESG report in April, showing commitment there. And as we mentioned, they continued share buybacks, hitting US $2.1 billion cumulatively under the current program. So ticking those boxes too.
Right. Okay, let's try and wrap this all up. If you had to boil down the key takeaways from Baidu's Q1 2025, what stands out most?
I think the main headline is really the AI first strategy paying off. You absolutely see it in that huge AI cloud revenue growth driving the Baidu Core performance.
Yeah, that 40+% growth is hard to ignore.
Exactly. And then you see the tangible results in Apollo Go, the ride growth, the international expansion. It shows the AI investment isn't just theoretical, it's building real world services.
But it comes at a cost, right? The negative free cash flow.
For sure. It highlights the trade-off. They're making a big, expensive bet on AI for the long term, and that impacts cash flow now. But they clearly believe it's essential.
And it signifies a real shift away from just relying on online ads.
Absolutely. While online marketing dipped, that surge in non-online revenue, led by AI cloud, shows they're successfully transforming their business model. And the continued R&D, the new ERNIE models, it all points to a deep commitment to leading in AI.
So fundamentally, a company in transition, doubling down on AI, seeing early successes, but also bearing the upfront costs of that transformation.
That sums it up pretty well. They're navigating this shift, the investments are significant, but the growth in AI cloud and the progress in autonomous driving suggest it's a strategy that's starting to deliver. It really feels like they're positioning themselves for a very different future.
It's been fascinating to unpack these results. A clear picture of a tech giant betting heavily on AI. So here's something for you, our listener, to think about. As Baidu keeps pushing the boundaries with AI like ERNIE and services like Apollo Go, how might this fundamentally change industries we rely on every day? And what are the bigger questions, the societal impacts we need to consider as this kind of advanced AI becomes more woven into everything? Definitely food for thought. Thanks for joining me for this deep dive.